Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Sebastian, Chief Operating Officer over at Option Pit, to take a look at movement in the Nasdaq-100 Volatility Index, known as VOLQ. Mark, it's great to see you as always. Welcome back to Trade Talks. And you're looking at lows here with VOLQ. Do you think that's a function of what we've seen through earnings season now that the megacaps have reported?
I think that's partially it. The mega-caps, people were worried. They mostly came in very strong. Amazon was a little soft, but that was really about it. Apple was soft, but they came in and bought it anyway. Microsoft, Meta, and Google all, reporting very, very good earnings. And so, yeah, the Nasdaq 100 as a whole, implied volatility is really taking on the chin as we head into CPI this week. But coming out of earnings season, all of the catalysts that would bring a lot of fear into the Nasdaq 100 seems to be kind of sucking out.
Yeah, well, I mean, of course, the Nasdaq 100 doesn't have exposure to the banking sector. So when you think about from the macro perspective, everyone's focused on the Fed, what's happening with interest rates, what's happening in the banking sector, but you don't have that exposure in the Nasdaq 100. And it seems to be banks and the Fed are really what market participants are focused on.
Yeah, the energy too. If you look, this rally has been very heavy in the mega caps, and really everyone else has been left aside. QQE, which is the equal weighted version of the triple Qs, has done absolutely nothing, while we've seen this pretty nice rally in the triple Qs. So the only thing you worry about is that we do get some sort of reason to sell, maybe out of CPI. And now we have so many people bunched into these 5 stocks. If people decide to get out, is there going to be too many people trying to exit at once out of a couple of doorways, and we get a couple of outsized days for those mega caps where they seemingly for little or no reason take it on the chin.
Yeah, well, I guess, Mark, that's really what the risk is. It's almost concentration in those 9 to 10 mega cap names. And typically we like to see more broad-based rallies. It just feels a little bit better because, to your point, should one or a number of them take a hit for whatever reason, whether it's specific to the company or due to macro reasons, that's really going to have an impact, not just on the Nasdaq 100, but a number of those stocks, Apple, Microsoft, Amazon, Alphabet, do have a lot of exposure in a number of other indexes.
Absolutely. There's huge crossover between the Nasdaq 100 and the S&P 500 right now. The amount that their top 6 stocks take up in the Nasdaq 100 and in the S&P 500 are near all-time highs. So you're really seeing the indexes really get crowded at the top, and that is a risk if for some reason a bunch of money comes off the table quickly. But right now, not a lot happening. I think the next couple of days are going to be a little slower ahead of CPI and out of earnings and non-farms last week.
Right. And the mark, of course, you said in the Nasdaq 100 Volatility Index VOLQ is trading at lows. Is there anything relative to VIX, right, which is S&P 500 volatility? Is there any, clues there?
Yeah, it's interesting. The Nasdaq 100 is really on top of the VIX. So the spread between the VOLQ and the VIX itself is really tight. And what that shows, as you said, is that there's the market risks perceived still remain in the banking sector, still remain in areas where the Nasdaq 100 really doesn't apply. The other big piece is that we're seeing that skew is getting bid up. So the Nasdaq 100 looks at the money implied volatility in the triple Q, whereas VIX and VXN is the Nasdaq 100 using VIX methodology. They're using the whole curve. VXN is trading at a significant premium to where VOLQ is as well, which shows that the demand for options is not at the money, but it's out in the wings where people are buying protection against a 1 or 2 or 3 standard deviation move.
All right, Mark, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.